Welcome to the direct loan entrance interview. This interview is mandatory for anyone borrowing a direct, subsidized, unsubsidized, or direct graduate plus loan for the first time while at Goddard. If you have any questions, please contact the financial aid counselor for your program. I'm Shannon Trainer, and I am the financial aid counselor for the education programs in both Vermont and Seattle and for the UGP1 program. Manuel O'Neill is the financial aid counselor for the MFAs in interdisciplinary arts and creative writing programs in both Vermont and Port Townsend, GGI, UGP2, BFAs, and psychology programs. Here's what we'll cover today. We will cover the difference between subsidized, unsubsidized, and plus loans, how your financial aid was determined and what paperwork was required. We'll briefly go over repayment options, when your aid gets dispersed and the process for receiving any overages, deferment for transfer students or students with previous direct Stafford loans, what happens if you withdraw, take a leave of absence, or go on extension. A subsidized loan is a loan in which the federal government pays the interest on the loan while the student is enrolled at least half-time. An unsubsidized loan is a loan in which the student is responsible for any interest that accrues on the loan, and then the accrued interest gets added to the principal of the loan when the student enters repayment. For direct subsidized, unsubsidized loans, you will have a 6-month grace period from the last day of your last semester, not from the date of your graduation, from when you withdraw or fall below half-time status before you are expected to start making payments on your loans. If you take a leave of absence, it may use up your 6-month grace period, and you may have to make payments until you enroll in your next semester. If your leave of absence is less than 6 months, then your grace period will reset once you enroll in your next semester. Subsidized, unsubsidized direct loans have a maximum interest of 8.25% for undergraduate students and 9.5% for graduate students. Interest is variable and can go up or down every academic year. There are also Graduate Plus and Parent Plus loans. These loans have a maximum interest rate of 10.5%. The borrower may postpone making payments on these loans while the student is in school. Plus loans are credit-based loans, and if a borrower has insufficient credit, he or she may have to obtain an endorser or complete an appeal. Students who are originally denied a plus loan must also complete plus loan credit counseling in addition to appealing or seeking a valid endorser in order to have funds dispersed. Credit checks are done by the Department of Ed and are good for 180 days. All federal loans have origination fees, so the amount that you borrow will not be the same amount that is dispersed to the school. Origination fees are determined by Congress and are variable based on when the loan is dispersed and the type of loan. When you enter repayment, the servicer will start you off on a standard repayment term, which means you will pay the same amount every month for a period of 10 years. There are other repayment terms available, but you must contact the servicer to see if you qualify. Some other repayment options are graduated repayment, which means when you first enter repayment, you pay a smaller monthly amount, and every 24 months, the payment increases. This is a good plan for someone who expects to be making a much higher income in a few years after college. With this plan, you will pay back more than the standard plan because you're not attacking the principal of the loan as quickly. Extended repayment. This plan means you extend the repayment term from 10 years to up to 25 years. You pay a smaller monthly amount, but you end up paying more over the life of the loan. You must have borrowed over $30,000 in direct loans in order to be eligible for this repayment option. Income contingent. Payments are calculated each year and are based on your annual income, family size, and the total amount of your direct loans for up to 25 years. It will also include your spouse's income if you are married. Income-based repayment. Your maximum monthly payments will be 15% of your discretionary income. Discretionary income is the difference between your adjusted gross income and 150% of the poverty guideline for your family size and state of residence. You must have a partial financial hardship in order to qualify. Pay as you earn. Your maximum monthly payments will be 10% of discretionary income. You must be a new borrower on or after October 1st, 2007, and must have received a disbursement of a direct loan on or after October 1st, 2011. You must have a partial financial hardship. You'll pay more for your loan over time than you would under the 10-year standard plan. If you have not repaid your loan in full after you made the equivalent of 20 years of qualifying monthly payments, any outstanding balance on your loan will be forgiven. You may have to pay income tax on any amount that is forgiven. Consolidation loan. You can also take multiple loans from multiple lenders and consolidate them, making a new loan with one lender. In order to determine the interest rate, they take a weighted average of all the loans and round up to the nearest 1/8% and will not exceed 8.25%. Remember to talk to your servicer if you are ever in a situation where you can't pay back your loan as agreed upon. If you do not repay your loan as agreed upon, you may enter default. Consequences of default are an increased loan amount, garnishment of wages or income tax refunds, collection fees, inability to receive any more federal aid, and it will adversely affect your credit, making it difficult to receive other types of loans or an apartment or jobs. The aid you received is based on your financial situation as submitted on the FAFSA form and your grade level. If you are an undergrad, as you move up in grade level, your eligibility for loan funds increases. You may also have received a Pell Grant, CEOG Grant, state grant, institutional grant, private scholarship, or private loan. Graduate students are only eligible for loans as far as federal aid is concerned. On your award letter, you may have noticed that you received more aid than your direct costs. This means the overpayment will be refunded to you, commonly known as the refund check. The refund check can be used towards anything educational in nature to help ensure you have a successful semester, such as books, supplies, computer, travel expenses from the residency, etc. This is to help supplement your current employment, not to replace employment. Refund checks are mailed out the next business day following a residency to eligible students. Or if a student is physically attending a Vermont-based residency, the refund check can be picked up on the last day of the residency before noon. Students must have completed all financial aid paperwork and had their advisor sign off on their study plan and SIS to receive the refund check. Refund checks can be delayed if the funding arrives late. If students don't have a valid address on file with the Student Accounts Office, or if they use a preferred name rather than a legal name on their paperwork. Anyone submitting late financial aid paperwork or whose aid is received later in the semester will have a refund check created and mailed within 7 to 10 business days of when the funds are received. Occasionally, non-federal aid may take several weeks to be received and for a refund check to be mailed. The FAFSA form must be submitted each academic year at fafsa.gov. We usually encourage students to apply in March or April for the upcoming academic year. Students are encouraged to use the IRS data retrieval option when completing the FAFSA. The IRS data retrieval option lets students populate the financial area of the FAFSA form directly from the IRS. There's no worry about typing in an amount incorrectly or losing your copy of your 1040. You will also need to sign your FAFSA. You can do this by applying for a username and password on the FAFSA website. This same username and password will be used to sign the Master Promissory Note, complete required entrance counseling, and sign on to the National Student Loan Data System when you graduate. NSLDS is a government site that keeps track of all the federal aid you have received, as well as which lender or servicer you owe, what school you received the aid at, when it was disbursed, and if the loan has been paid off, is in repayment, or is in default. Typically, we don't start awarding financial aid for the next academic year until the beginning of April. So if you submit a FAFSA form in January, please understand that it will be several months before you receive an award letter from our office for the upcoming fall semester. Other paperwork that may need to be submitted to the financial aid office to determine your eligibility for aid could be a master promissory note, verification paperwork, W-2s, tax returns, Parent Plus loan certification sheet, proof of citizenship, selective service documentation, or high school diploma or its equivalent. The Master Promissory Note is the loan application and is good for up to 10 years. The Master Promissory Note and entrance counseling requirements are completed online at studentaid.gov. When you received your award letter, you were given the option to adjust the aid, such as declining or reducing a loan. You may also reduce or cancel your loans within the first 14 days from when the loan is dispersed to your student account, and it will be as if you never took the loan out. But remember that if you've already received a refund check, you would have to return the funds to the servicer yourself. For those of you who received loans at a previous institution, your loans should automatically go into an in-school deferment status as soon as the registrar's office reports you as enrolled to the Department of Ed. You also have the option of having the registrar's office complete a deferment form and have the form sent directly to your previous lender or servicer. All confirmation of your enrollment status is completed with the registrar's office. If you have private loans from a previous institution, you should request a deferment form from your lender for the registrar's office to complete, although not all private loans have an in-school deferment. We also recommend you request a deferment form for any Perkins loans you may have borrowed at another institution. Remember, if you have any questions on your loans, you can check with your lender or servicer. The Financial Aid Office offers financial literacy information at each residency. Please contact Shannon Trainer, that's me, if you are interested in setting up a financial literacy meeting, either in person or over the phone. Students must continue to make satisfactory academic progress in order to keep receiving federal aid. Students with 2 consecutive semesters with no progress will lose their eligibility for aid. Even students receiving partial credit for 2 consecutive semesters may see their aid affected. For undergraduate students who receive the federal Pell Grant or subsidized Stafford Direct Loan, there is a limit of 12 full-time semesters. Students who exceed this limit exhaust their eligibility. Students who switch from full to part-time or vice versa may see an adjustment to their aid or a delay in their aid. Please notify the Financial Aid Office as soon as you're considering a change in your enrollment status. If you decide to withdraw or drop during your semester, there can be some serious financial ramifications. There are 2 calculations that must be considered. The first is that the Student Accounts Office has a withdrawal policy that calculates your tuition reduction based on the week of withdrawal. The Financial Aid Office is required to calculate the percentage of unused funds based on the day of your withdrawal, and those 2 calculations very rarely equal out. For example, let's say you borrowed a $10,000 loan for a program that costs $8,000, and you decided to withdraw on the second day of the semester. The Student Accounts Office withdrawal policy states students who withdraw during their first week get a 75% tuition reduction. The Department of Ed says you've completed about 2% of your semester. So you'll get to keep about $200 worth of aid to use towards a $2,000 bill. Students are encouraged to contact the Student Accounts or Financial Aid Office before deciding to withdraw. That way you'll know what the financial ramifications will be. And if you received a refund and you are concerned that you may have an unsuccessful semester or personal matters make it so you cannot complete the semester, you might not want to spend your refund check because it will probably have to be returned. Bear in mind that if you withdraw from a semester with the intention of coming back, your student account must be paid in full before you can re-enroll. Having a balance due on your account can also affect getting your transcripts if you decide to transfer to another institution. Financial aid is not available for extensions, in-between semester studies, or your graduation weekend. These costs will need to be paid out of pocket or by using your refund from a previous semester. Financial aid also can't be dispersed before you enroll for the semester. Remember to complete all financial aid paperwork at least 16 days before the start of the next semester in order to pre-register for the upcoming semester. Anyone who is not pre-registered 16 days in advance of the next semester will be charged a late payment fee and a late registration fee. Any balance on your student account must be paid before you will be allowed to register for the upcoming semester. Students with incomplete paperwork at registration will be charged a residency deposit of at least $1,500. Students who still have incomplete paperwork 30 days after registration will be charged another late payment fee. We encourage you to contact your legislators, senators, congresspeople regarding the funding of higher education. Changes to any of the federal financial aid programs offered at Goddard will be conveyed to students via email or on our website. So make sure you check your Goddard email address often. And that concludes the entrance counseling requirement. Thank you.